Hey everybody, this is Brett with a quick market update here for Bitcoin. It is June 2nd here, finally into June, and I got some things to share with you here. Just back from the Bitcoin conference, did see Max and also met Juan for the first time. So we had a great time down there, and we'll have a video interview out soon that our team is editing for from the Bitcoin conference. So that was a lot of fun. Anyway, quick look at the markets here today. We've got the markets on the weekly basis kind of forming a head and shoulders here. So I'm wondering, do we bounce? We are in an upward trending channel here. So if I can draw that real quick here and just show that option in these. Well, it's already here in the blue ranges. So if we come back down, I have been suggesting we come back down to 25,300. Again, very key support resistance area. We pushed up towards that in August of 22, rejected, came back down, trying to break through it again here, both in so Monday, February 20th, and then the next week here, rejected there, finally broke back above that, went up to 32, right about 32,000, just shy of that, where I thought we would head up to. And that's really the next line in the sand. If we can break and hold above 32K, then I think there's a strong case to push higher to 48K. Possibly 50K. But the other side of things, so we have this upward trend channel. If we do come down in this zone, you see I have these two possibilities, this up green arrow there. And so if we come down, bounce off the 21 and 50 week moving averages, these are exponential moving averages. That is scenario one. We'd like to see that, of course. Scenario two is if we do break, but down below that 25,500, 25,300 level, then we potentially can put in another shoulder, the right shoulder of this, for a head and shoulders breakdown. So we want to see if this upward trend channel can remain intact. And if not, then more than likely we'll come down, form another shoulder. If that neckline breaks, which would be around 21,800, then the measured move would be down here around 15,900, retest the lows. So there is a case for that. There's a CME gap that's unfilled around 20,000. So we don't know for sure if that fills now, later, or ever, but it's worth noting and keeping an eye on. All right, so let's kind of take a look at the DXY here. DXY has pulled back here. I have this chart. I've had this drawn for many months. Back in February, kind of created this hypothesis of the DXY. And so in this zone, whereas DXY has sort of had some support and then resistance in the past, we did push up to this upper level here, and that's when Bitcoin was dropping. And so we have a bit of a pullback on the DXY, not much of a corresponding rally in Bitcoin though. So we'd want to see more of a rally here. Here's a daily chart of Bitcoin. We're back down below the 21 and 50-day EMAs, so not ideal for Bitcoin. Just to layer on some things on the daily basis. So in the red zone up here, it's a liquidity zone from all the way back in May of 2022, where it struggled to hold this, and a year ago, so which finally broke down. And of course, we went down to these new lows down here in the 16,000, new cycle lows around 16,500, which ironically I'd predicted that level in May of 2022 as well. So anyway, here we are. We have this nice bottoming pattern. I do believe the bottom is in. So anything can change in the economy, but in near term, we did have a head and shoulders breakdown back in here. And we didn't quite have the measured move back down into this zone yet, but it's possible. That would put us down in this 25,500, 25,300 level, which I just showed you on the weekly chart. So this green zone here I have as sort of a buy zone. I think that more than likely we come down into this area and have a strong bounce, and we have that push higher. And the key question is, can we break and hold above that 32K? The reason that's significant is if we want to, and here I have it on a monthly basis, as if we can come down to that level and bounce out of it, then we have potentially a the golden pocket move up higher to that 48K, right in this golden pocket region here. And if we can hit 48K, again, we've got to clear 32,500 on a closing weekly basis, and ideally monthly basis. Then it's a pretty quick run up to that 48K level. Maybe we stumble a little bit at 42K, that 50% retracement. But again, that golden pocket zone, 48K to 50K, at which point we could see really some pullback. Now, it is likely to be mostly a sideways market in 2023, and then 2024 we really start seeing that volume picking up into the markets and into the halving, and hopefully into 2025. So a lot of uncertainty here. Again, I did lay out this possibility of the hyper Bitcoinization. If these three things were to happen, not likely. Was talking to Juan about it down in Miami. He's a really smart guy, and had great conversations about cycle theory and the timing of all this. So that is something we're talking about, connecting and overlaying what I'm doing and what he's doing. But this is just a outlier scenario. If we see de-dollarization and hyperinflation, the BRICS nations not using the dollar as much, could send more dollars over our way and have a inflation. Certainly, there's possibility of another interest rate hike. So we have to see what happens there. Then if we do see QE printing, we have the debt crisis sort of semi behind us. What does that mean? And it's been passed allegedly, and I just don't know if there's another hiccup. However, what does that mean? More QE could mean more money going into these markets. And then the third factor, the trifecta, would be bank failures and bank runs. If we have more bank failures, people pulling their money out of banks into assets like Bitcoin. That's why it was created. And as Max was saying on his video from today, he got into Bitcoin really to save the world. That is the use case of Bitcoin, so that we don't have all these fiat currencies devaluing and hyperinflating their way down to zero. And so we could see bank runs and transfers into Bitcoin. So there's other factors, of course. If we have some meaningful regulation, institutions start pouring back in. So I don't think it's likely we hit 100K here in the short term, but I do think we'll break that certainly in the next cycle. And my levels here that I think are also likely into 2024, 25, 155K, 210K. This is actually published, something I published here on TradingView. And just to see how that played out, it so far has played out on this fractal pattern very closely from back in here on this weekly basis. So pulling back to this 50-week moving average area. I do think we had higher in June and July. How high is hard to say. Again, I think 48K 50 is a likely zone to push up, and had some resistance. From there, this scenario possibly could play out. This is the chart on it, but really we are looking bearish here on the weekly basis. From our own indicators, our trend indicator is red and heading lower. Really, we want to catch these moves down in these levels when our trend indicator is going green, turning green, and breaking that 20 line. Won't really go into that here. I want to jump back over to this weekly chart again, watching to see if this 25,000, 26,000 level can hold. If so, and we start to rally off the bottom, that would be good. However, it's not looking likely in the next week or so. Really, I want to see this oscillation come back down into the oversold zone and then bounce up out of that 20 level. Now, we have seen it hold here right about where we are, around the 60%. Again, this is one of our custom oscillators, but we don't know. It remains to be seen. Back to the monthly chart of Bitcoin, however, if we were to hide these buy-sell zones, I did want to show the previous bull cycles. So let's just go widescreen on this and zoom out. When in doubt, zoom out. And so again, my thesis is we have had a bottom. Our trend strength indicator has only done this on a monthly basis 3 times before, and also coinciding with our early reversal indicator, which are these arrows. So the last 3 market cycle bottoms showed this, and then we did put this in January of this year. So that's why the bottom is in. We just need to stabilize, consolidate a bit. These windows here are 2-year, basically bull markets. Once we get into the bull market, typically lasts 2 years, and I do think we're into this early stages of that. So that's the good news. And the last thing I want to show you here is this is something new we started playing around with here this week. The Bollinger Bands. Everyone, you guys are familiar with Bollinger Bands. However, probably not using it the same way that I'm using it here. Typically in crypto, I like a 3 standard deviation Bollinger Band. But what we overlaid on this week's chart in a class I did earlier this week is on the Bollinger Band. Let's go ahead and add this. I'll show you how to modify the Bollinger Band. And what's really interesting, watch this. This is fascinating. So on the Bollinger Band, we're going to come up and modify this from a standard. Now, I have it set as a 3 standard deviation, which for me in crypto has been excellent in containing price. So let me just show you that real quick. Let's see if we can turn all these other ones off. I don't know, that may kick back on here in a minute. there. So on a 3 standard deviation Bollinger Band, it really contains price well. So I tell people ask me all the time, where should I take profits? I say when it breaks above the Bollinger Band with the 3rd standard deviation, you can see it hits tops here, pulls back, tops here, pulls back, tops here, pulls back. On a monthly basis, however, we discovered here to this week, if we change that to a 4 Bollinger Band, that applies very well on the upside for the monthly basis. Now this is skewed a bit, and I think I have another indicator kind of throwing this off. So let me just turn off everything else, and maybe that will come back in line, because that was something we're watching this week. I think something's throwing this off here, and I don't know why. Let me zoom out the lower edge anyway. Doesn't matter. Let's look at the upper side of it. So going back here, the market was topping out back here in June of 2011, spiked up above the 4 standard deviation Bollinger Band, pulled back. That was the market cycle high. Similarly, back here in November of 2013, we saw it again here in December of 17. So again, we're watching that upper Bollinger Band on the modified, the 4th standard deviation. Here was the exact top in 2017. Again, when it breaks above that upper Bollinger Band, that would have gotten you out. That signal alone would have gotten you out. So, and avoided all this downside. And similarly, we saw this happening here in the last market cycle high, end of 2021, broke up above the Bollinger Band here. And so that was the early signal to get out before the big drop. So watching a number of things on these charts. And again, primarily we are watching, I'm watching our other indicators that we have here over at Moonstream Crypto. So basically the bottom signals that I have is the ERI and TSI. I'm jumping around a bit, pardon me. So here, bottom is in, bullish engulfing. You know, I did predict we'd come back a bit. We had a bearish engulfing candle in May. I think we still pull back here in June and touch this 25,500 line, 25.3, and then I really, again, hopefully push up higher from there. And also seeing that pushing higher on our trend strength indicator. So, and our signal line also going green. If you like the traditional indicators here, we are still watching the monthly MACD. Nice, very symmetrical kind of parabola here. Really do want to see this break up above the 0 line into the green zone. And then that would be a confirmation that we're going higher. But you have the 2 lines here sort of not ready to cross. Things are slowing down a little bit. So this month, pivotal, we need to see these lines cross to the upside and start going green on the monthly MACD. So hopefully that's helpful, everybody. And we'll look forward to talking to you guys again next week. We should see some more movement in the markets and some more direction. So again, it's Brett here, and with your weekly market update. Take care, everybody.